Good morning. It's April 19th. The market's down this morning. We've had earnings come in that are a little bit softer than expected in a few areas. And today we're going to be talking about one of those names in the communications area. So let's jump over to Longbow. So first I'm going to start with the ETF XLC. That's the communications sector. We've got an oversold signal today, short-term bullish, medium-term bullish, and then implied volatility signal in terms of, whether it's a discount or premium of neutral. So it's kind of hugging that line. People aren't overly cautious or overly excited. So in this kind of scenario, if you were looking to add in communications, you would be able to buy on today. Let's take a look at the risk range. This gives you a longer situation for the stock price relative to the trading ranges. Hopefully you enjoy the new viewing situation here with the trading ranges. What you can do is if you want to move it left and then zero in on the most recent time frame, you can do that. You can do it even in just a few days. And what we're seeing here is that, taking a bit of a longer picture from, call it last May, you've been in a downtrend during the year. No surprise, there's been an uptick since the fall lows in the stock market, including communications. And then it's been up, but then pretty choppy. So you can see the risk range here works really well. So it trades up to the top end of the trading range. You're getting a sell signal, boom, it goes down. You're at the bottom, boom, it goes up. And right now, you're really kind of like threading a very, very small needle in the range, but we're hitting the lower boundary of the trading range. So again, today, if you were looking to add, wouldn't be a bad day. If you think, technically speaking, that's what you want to do. Fundamentally, obviously look at the names in the XLC and see if you want to do them. Google, we're getting oversold. Disney, oversold. Netflix, oversold. They printed. One of the things that people are upset about are the new subscriber ads. That said, in our note today for Longbow Arrows, we talked about the focus on cash flow. So do we mind if we're peeling off people who are not paying, which is making for overall subscribers to grow? Not as much if you're delivering cash flow. That gives you a lot of optionality, whether to invest in your content, invest in your technology, invest in your people, give money back to shareholders. So we actually like it during more challenging times, and we put that as 2023, economically speaking. The companies do get cash flow in order to grow and or enhance their business. So if we're looking at it technically speaking, obviously it's kind of way beyond the low end of the trading range. That's because there's actual fundamental news that came out. It's oversold. We're not getting on any of these, though, the core signal for Longbow. And that's because on some of these here, you have short-term bullish, but then medium-term bearish, like Alphabet. Same thing in Disney, short-term bullish, but intermediate-term bearish. You do have implied volatility premiums, so people were paying up for protection for Disney and Netflix. But when you have this divergence of some technical signals, you're not going to get the core signal working for you. That really wants to have, call it all of the stoplights that you're going through to be green. They don't want to see yellows and reds. It's not as much an easy path forward when they're not all in that same color and direction. That's it for today. We'll be back tomorrow. Lots of earnings to get through, and we'll keep you updated, technically speaking, on them.